So today, we're going to dive into a really provocative theory from one financial analyst. It connects three things that honestly don't seem related at all: a US government shutdown, the Federal Reserve, and what they call a high stakes global economic chess match. Let's get right into it. Okay, so let's start with the central mystery here. For weeks, it felt like the stock market just couldn't be broken. Every little dip, it just bounced right back. And then, bam, a sudden, sharp plunge that just shattered the pattern. So the big question the source material is asking is, what on earth just happened? Now, the analyst behind this whole theory points a finger directly at the US government shutdown as the trigger for that market drop. And look, on the surface, that sounds a little weird, right? I mean, we've had government shutdowns before, and they didn't really cause this kind of chaos. And this is where it gets really interesting. The analyst says, look at the difference. In past shutdowns, the market kind of shrugged it off. Safe haven assets, things like gold that people rush to when they're scared, they actually went down. But this time, the complete opposite. The market tanked, and gold and silver prices just took off. According to this theory, that's a huge signal that something is fundamentally different this time around. And this brings us right to the core thesis. The author is basically arguing that this isn't just about some political squabble in Washington. No, they're saying these are moves in a much, much bigger game, what they call a great global redistribution of assets. So the stakes, as they see it, are unbelievably high. So let's dig into the first big claim of this theory. The analyst is arguing that the real reason for the shutdown, it has absolutely nothing to do with politics. They think there's a hidden motive at play. So, the official story we all hear is that it's a budget fight in Congress. Simple enough. But this theory claims the shutdown is actually a strategic weapon. Its purpose? First, to hide new inflation data by stopping its release. And second, to use that missing data to basically force the Federal Reserve's hand and make them cut interest rates. Okay, to really get this, we need to quickly talk about how the Fed makes these big decisions. According to this theory, it's all a balancing act. You've got rising inflation. That's the brakes. It's the main reason you don't cut rates. But then you have rising unemployment. That's the accelerator. That's the main reason you do cut rates, to try and juice the economy. So here's the playbook according to this theory. Step 1, the shutdown literally makes the official inflation data vanish. Poof. So the Fed's biggest reason not to cut rates is gone. Step 2, private unemployment data is still coming out, and it's showing the job market is getting worse. So suddenly, unemployment is the only big scary number on the dashboard for the Fed to look at. With inflation gone and unemployment looking bad, the Fed is essentially backed into a corner. The pressure to cut rates becomes just massive. Now, running parallel to this whole government drama, the theory describes this huge financial bubble in the AI world, which it calls basically an elaborate shell game designed to keep stock prices artificially pumped up. The author has this really memorable way of describing it. They call it a left foot stepping on the right foot scenario. It's a perfect image for a system that's just propping itself up, A circular flow of money that creates this illusion of insane growth, but with no real customers from the outside world actually driving it. And here's the specific loop the theory claims is happening. It kicks off with OpenAI signing a massive contract with Oracle. Then Oracle turns around and plows huge amounts of money into chip makers like NVIDIA. And then, to complete the circle, NVIDIA invests that money right back into OpenAI. You see the loop? So what's the result of this whole money go-round? Well, on paper, everybody looks like a genius. They all report these massive revenues, they blow past investor expectations, and their stock prices go to the moon. But the theory points out one giant missing piece: the actual end consumer. In fact, OpenAI, the company at the very center of all this, is described as a company that's actually losing money. And the author really drives this point home with another killer analogy, saying, even when I play basketball, I do not dare to pass to myself and catch it myself like that. It's just such a vivid way to describe a game that's being played with itself. Okay, so this brings us to the final act of the theory. This is where the government shutdown and that whole AI bubble are tied together into a much bigger global chess match. And the end game here, well, according to the source, it is absolutely stunning and frankly, pretty cynical. The ultimate goal, they claim, is to intentionally engineer a global financial crisis. The objective isn't to avoid a crisis, but to create one on your own terms.
This slide lays out the whole sequence, the dominoes that are supposedly set up to fall. It starts with the US hitting Chinese ships with new fees. China, in this scenario, is expected to hit back by restricting rare earth exports, which are absolutely critical for AI chips. That restriction then becomes the pin that bursts the US AI bubble, triggering a market crash. And here's the key. The crash can then be blamed entirely on China. It creates the perfect political cover for the Fed to come in and do its most extreme move, slash interest rates all the way back down to zero.
So what's the point? What's the strategic win here? Well, according to this theory, creating a crisis that you control makes the US dollar the ultimate safe place to hide. As money from all over the world rushes into the dollar for safety, the US gets to cut its own interest rates to zero, flood its system with cash, and handle its own debt without anyone pulling their money out. So, given this pretty chaotic outlook, what does the analyst suggest doing? Well, they don't just see it as a crisis. They frame this whole moment as a massive opportunity, but only for people who can see what's really going on. So the analyst reports that they basically sidestepped all the drama in the stock market by moving into precious metals. They point to these huge returns in gold and silver, and they call it the easier path for investors because these assets just tend to do really well when everything else feels uncertain. And to really drive home just how big of a deal they think this is, the author draws a straight line back to the 2008 financial crisis. They point out that after that crisis, fortunes were completely wiped out, but new ones were made, and the class order was nearly reshaped. They believe a moment just like that is happening right now. And that really leaves us with the final, powerful question that this whole theory poses. If we are actually living through a great global redistribution of assets, who's going to end up being the winner, and who is being set up to be the loser? It's a heavy thought to end on, and it definitely makes you look at the daily financial news in a completely different light.